This is Shelley Kraft coming to you live on SNN Live. We're coming to you live from the Sprott Symposium 2018 in Vancouver, BC, Canada. I have with today Adrian Day from Adrian Day Asset Management. He's a speaker at the conference and a raconteur, well known in the industry. Adrian, welcome back to SNN Live.
Well, thank you, Shelley, for having me.
It's good to have you. Now let's get started. Let's find out a little bit about you for our audience, and then we'll ask you some questions.
Oh, okay. Well, we manage money for individuals and small businesses. They're all segregated accounts. They're all individualized to the particular client and their risk profile and their objective. And we manage in global markets as well as in golden resource.
So what are you speaking on at this conference?
Okay. One of the problems in the mining business is it's a very, very difficult business. For miners, it's very difficult because they have to keep replacing the ounces that they produce, and it's difficult and expensive to find ounces. For exploration companies, it's very difficult because, frankly, the odds are stacked against you. And you have to keep raising money because you don't earn anything as an exploration company. So I'm speaking on, well, is there a better way? And I think the royalty business model, the royalty companies at the high end against the producers and the prospect generators, the business prospect generator model are better ways of making money in this business.
And why is that?
That's a huge subject, as you know. Royalty companies essentially give money, invest money, and it can be in producers, it can be in development companies, or even in exploration companies. But they invest money in these companies in exchange for a piece of the pie, in exchange for a royalty when they produce. The benefit to the model is that they never have to deal with the problems. Now, things can go wrong, of course. If the mine never comes into production, they never get their royalty. But they don't have to deal with the governments, with the NGOs, with the mine collapse, with the wall collapses, with the floodings at mines. They don't have to do unions. They don't have to deal with all of that. And so the royalty model tends to be a much lower risk business model and therefore a lower risk investment.
But at the same time, you must agree that they have to do a very special level of due diligence to find the right people to invest in.
Absolutely. Due diligence, of course, is the key to their investments. They are making investments just as you and I, when we invest our money, are making investments. And they do an incredible amount of due diligence to make sure, that they think the property is going to be what they think is going to be. They also, very important, is the way they write these contracts. So some contracts, for example, when it's a huge investment, Cobre Panama, which is a copper mine being built by First Quantum in Panama, believe it or not. Franco-Nevada has a royalty on the silver offtake, on the silver stream. And, they have a stream on the silver production. Huge investment, $1.2 billion. And they wrote the contract, so they staged those investments depending on the hurdles that First Quantum had to meet. So that was a clever way of minimizing their risk, but still getting the exposure.
So, obviously, for full disclosure, do you own any of that company?
Oh, yeah. Franco-Nevada, I own personally, my family owns, but it's also our largest position in a money management firm for clients. I've always said to people, if you want to own one gold stock, it's Franco-Nevada, and we can talk more about Franco if you want, but yeah, I own it. In fact, any company that I mention favorably here, we're going to own.
So let me ask you a question on if a prospect generator or a royalty arrangement with a company exists, and that underlying company is then taken over, does the royalty move with the newco?
Yeah, good point. The royalties are always on the property. Streams, which are something a little different, the streaming model was developed by Silver Wheaton originally, now Wheaton Precious Metals, which we also own. And a stream is a little bit different from a royalty. Streams sometimes are with the company, so you have to be very careful about that. With a royalty, you're basically looking at the ground. So you're looking at the geology and, of course, the politics, but you don't worry too much, I'm exaggerating a little bit, about the company.
So I always looked at prospect generators, or sometimes called project generators, as literally having a diversified portfolio in an exploration portfolio. Do you agree with that statement?
Yeah, no, that's absolutely correct. And that's really the main reason that I like. And when you're looking at a traditional exploration company, typically, unless you're looking at a very large one, typically they have one or maybe two projects that they're developing. So your risk is very, very focused. With a prospect generator, you might have anywhere from 10, 20, 30 different properties that they own. So I like to say that instead of having all of one lottery ticket, you have a piece of lots of lottery tickets. So your odds of having a success are much greater.
Does the price of gold, currently down from its highs, I'll say that kindly, does that price of the underlying commodity have the same effect on a prospect generator than it would on a single exploration company?
Yeah, it definitely has an impact. It has an impact because, first of all, it makes it more difficult or more expensive to raise money, both more difficult and more expensive to raise money. And prospect generators still need to raise money. They just don't need to raise as much as often as the exploration company. Certainly, when the price of gold is down, if you look last year, the year before, the senior companies, very few of them were interested in doing deals with the prospect generators. So yeah, it does affect them, there's no question. But the key to me is that because of a prospect generator model, which we could talk about for 4 hours, because of a prospect generator model, these companies are more able to withstand a downturn because of the capital structure. A prospect generator doesn't blow his brains out on a single property. So they tend to be better financed, they tend to have better balance sheets. Other people are spending the money, the famous OPM. Other people spend the money on developing the projects, exploring and developing the projects. And so in a downturn, there may be less money spent on their projects, but they still have their own balance sheet to keep going.
Adrian, let's get your website out there for more information, if you would.
Well, that's very nice of you. It's www.adriandayassetmanagement.com.
Ladies and gentlemen, Adrian Day Asset Management. He's a speaker at this conference. He's well known in the industry. We're glad to have his opinion on this Wall Street view. I'm Shelley Kraft. This is SNN Live, and we're coming to you live from the Sprott Symposium 2018 in Vancouver, BC, Canada. Thank you so much, Adrian. It's a pleasure to have you on.
And you. Thank you for having me, Shelley.
You're welcome.